Yeti's still on track to take a margin hit this year, but the gross margin, what they make after the cost of goods sold, is still up substantially versus 2019. That's all you can ask for, and that was the last normal year before the pandemic. They're doing what they can, coming out with new products, some of which I really love, expanding overseas, continuing to push direct-to-consumer. I don't know if you have their new one. I mean, it's incredible. I just love it. It's a little too heavy for me. That's why my wife lifts it. Baconator. Anyway, second, this is the right time of year for Yeti. The stock tends to experience a seasonal rally in the second and third quarters as people emerge from hibernation and start doing things outdoors. They cook, they grill, and they put a lot of beer in here. Third, Yeti's gotten ridiculously cheap, trading 21 times this year's earnings, less than 18 times next year's numbers. Think about that. Historically, this thing tends to tell for 31 times earnings. Now you're getting it 18 times next year's. The last time Yeti was this cheap, April of 2020, before it embarked on an epic 18-month rally. Now, we know it's cheap because a little over a month ago, management announced a $100 million buyback, which will last through next February. That's about 2% of the share count. It's not nothing. Yeti believes its stock is undervalued, and they've got the financial flexibility to put their money where their mouth is. At the time, it was at 61, which is exactly where it is today. That's my favorite sign of confidence. All right, there's one fly in the ointment. I recently went to my local Ollie's bargain store and saw a bunch of knockoff Chinese thermoses. They were called like Yeti. I mean, it's unbelievable. But they were the spitting image of my Yeti. But when it comes to keeping things hot, you cannot mess around. You have to get Yeti. And I'm not taking a knockoff, even if I am indeed a proud conscript into Ollie's army. Here's the bottom line. When the market finds its footing after brutal decline, which I think it's doing right now, you want to look for potential opportunities in previously expensive stocks that have suddenly become a lot cheaper. Just remember our mantra. We want real companies with real products and real profits that they can return to shareholders via dividends or buybacks. And that's Yeti Holdings. Not a lot of the stuff that went up today, okay? Today was pure froth. It doesn't hurt that this stock is coming at the ideal time for the cooking and camping season.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.